Welcome to the Market Update Desk with Scott Riley, powered by Mortgage One. It is Inflation Day. Consumer Price Index came out this morning. We've got a little bit of volatility going on in the market today. Wanted to do a full breakdown of it. There was a couple surprises. We ended up a little bit hotter than what we anticipated, but let's go through the numbers here. So headline or all-in CPI or inflation came in at up 0.44%. That brought us up year over year from 3.1% to 3.2%. The market had expected that we'd be flat year over year, so it was a little bit of a surprise there. Core, which strips out the volatile food and energy, that rose 0.36%. It's a little bit hotter than what the market expected. Although it did bring the year over year from 3.9 to 3.8%. Now, when we break into the subcategories, shelter, which includes rent, owner's equivalent rent, that we did the breakdown on that yesterday, and lodging away from home. Now, shelter costs make up 45.4% of total core CPI. So it's a big number. That's a big weighting. So that was up a total of 5.7%. Now that's down from 6%. So we have seen a steady decline in shelter costs. But the concerning thing is, as we go forward, we are going to start to even out on our month over month declines compared to last year. So the replacement number of what fell off last year to what comes in this year starts to get a little bit more evened out than what we've had the last 6 months. So getting that inflation down is going to be a little bit of a tougher road as we keep going forward. The Fed wants to get that, as they've said, the 2% inflation mark. Now, owner's equivalent rent, that's what threw us a curveball last month, rose 0.4% and dropped from 6.2% to 6%. So that gave us a little bit of a benefit this month. A weird one was apparel, which is 3.2% of total CPI, rose 0.6%. Normally, this is a pretty flat number every month, looking back for many, many, many months. So we don't know if this is an anomaly or something to be very concerned about going forward. So this was definitely an outlier that the market did not see coming. Education and communication, this is 6.3% of the core, rose 0.5%. And airline fares, which is 1% of the core, rose 3.6%. Now that's a pretty big one for the month. Motor vehicle insurance, this is the monkey that's been on our back. That makes up 3.5% of core. This rose 0.9%. Year over year, this is up 20.6%. It's a pretty big number. And that actually made up 0.3% of the total 0.44% increase in inflation this month. So that's a big one. And no matter what the Fed does, there's no real way that raising Fed policy or lowering Fed policy is going to affect motor vehicle insurance. So that's going to be a tough one for us to keep fighting back on. Later today, there is a 10-year auction, and that's going to be $39 billion of 10-year notes. So we're watching that very closely, as the bond auctions have more often than not been disappointing lately in the reception in the marketplace, both institutional and foreign buyers. That's something that we really want to pay attention to. National Federation of Independent Businesses came out with their index for optimism survey, and that dipped the index from 89.4 to 89.8. That's at 89.9. So small decrease there on the optimism. Most of the concerns within that report focus on labor. Plans to hire fell about 2%. And that's the lowest level since 2016 when you strip out the COVID time period. This is something we want to stay very attentive to. The other focus that they've got is compensation for both current and future hires fell and shows a sign of lower wage pressure. Now, the Fed likes that, but obviously for people at home fighting the inflation costs, it is a challenge. So clearly small businesses are seeing struggles uh, with employment and wages. ADP, which shows 13,000 small businesses created jobs in the last report last week, is in stark contrast to the BLS, which showed 275,000 jobs created. So the small business optimism does lend some weight and credence more so to the ADP report than the BLS jobs report. Credit card delinquencies saw an increase of 3.1% on delinquencies. That's the highest since 2011. Mortgage bonds are trading in a very tight range right now. And depending how the auction goes, excuse me, sorry about that sneeze, is going to lend that trend where we're going probably the rest of the day and into tomorrow. Friday brings out wholesale inflation. So that's going to give us the indication of what's going to happen there. 10-year bonds are up 5 basis points, and it's in a very tight trading range. If we do break above the 200-day moving average, there's concern that to the upside on that. So we've gotten through inflation data. We were a little concerned about this, especially from the sample week that we knew they were going to use last month, and the owner's equivalent rent factor. We were concerned about it, but we got through it, and we're doing okay. Looking forward to the wholesale numbers coming out Friday. We've got buyers out there writing offers. Let us help you get offers accepted with our knowledge and experience. The Market Update Desk, your original focus, singular point for market news in the West Michigan area. Give us a call. We'll help you out. 616-293-2189. Thanks.